Hello guys, welcome to our YouTube channel. Here you will get all the latest information and news from the crypto world. Today we are going to be discussing the FTX crackdown, the causes and how it all went down. In the past few weeks, words like FTX, FTT, Binance and CZ Binance have been flying around and sparking controversies in the crypto space. Especially for those of you who are active on Twitter, you might have wondered, what's really happening? What's the buzz about? How are all these entities related? Well, sit back and relax as I explain it all in details. To start with, what is FTX? Before diving into the crackdown details, it is important to know what FTX means for those who might not. FTX is a digital currency exchange, a platform where people could buy and sell digital assets like Bitcoin, Dogecoin, and Ethereum. Such platforms rose in popularity in recent years as more people look to invest in cryptocurrencies without the hassle of dealing with the technical side, such as setting up a crypto wallet. The company, founded in 2019, quickly rose to international prominence through a series of high-profile acquisitions, aggressive marketing strategies, and low trading fees. Competitor platforms included Kraken, Coinbase, and Gemini. Even those unfamiliar with the technology were lured to FTX, which promises that they could park their money in accounts and earn much higher yields than at traditional banks. Major venture capital groups also bought in, investing almost $2 billion in the company. Sam Bankman-Fried, FTX's 30-year-old founder, became the face of the company, and to some, crypto at large. Celebrity endorsements and major sports sponsorships made FTX hard to miss. What is FTT? FTT is a digital token created by FTX that is similar to cryptocurrencies like Bitcoin. Many crypto platforms now create their own tokens as a way to encourage people to use their services by offering perks associated with their token. As such, tokens can act like stock in the platform. As Binance has BNB and BUSD, FTX has FTT. The first red flag. Not long after Bankman-Fried started FTX, crypto began to boom. The price of Bitcoin, which had traded at around $10,000, shot up in 2021, peaking at more than $64,000. Venture capital money flooded into all things blockchain and crypto platforms moved to attract customers beyond the technologists and blockchain evangelists that once fueled its rise. The price of Bitcoin, generally seen as an indicator of the broader crypto market, declined dramatically from its late 2021 heights. It now trades at around $16,700. Other crypto and token value followed suit. This decline had already forced many major platforms to shut down, but FTX seemed immune, even buying up some of its struggling competitors. But things began to change at the beginning of November 2022 when the balance sheet of a crypto investing firm that was also owned by Bankman-Fried, Alameda Research, was published by CoinDesk. It showed that Alameda held a large amount of the digital currency created by FTX, called FTT. And though FTT held a certain market value, if the price were to drop, Alameda would be at a risk of insolvency. After Alameda's balance sheet was leaked, Changpeng Zhao, the CEO of Binance and a rival of FTX, announced on November 6th that his company would sell off all its FTT tokens. The price of FTT then dropped sharply. As the price dropped, many FTX customers moved to withdraw their assets from the platform. Those withdrawals would end up resembling a classic bank run, in which people worried about a bank's solvency and rushed to get their money out before it runs out of cash. Billions of dollars poured out of the platform. On November 8th, FTX stopped allowing customers to take money out of the platform. The crackdown. What was not public yet was the extent of the connection between Alameda and FTX, or just how bad things were for Bankman-Fried's companies. Those connections began to become clearer in the days following FTX's move to stop withdrawals due to its financial challenges. Rumors began spreading that FTX needed $8 billion to cover the gap between what it owed and what it would pay out. This was confirmed by Bankman-Fried during an interview on Monday with a Vox journalist over Twitter DM that he needed to raise $8 billion in the next 2 weeks to make things right with account holders. There were news from anonymous sources reporting that Alameda used FTX fund for trading. Also in the Vox interview, Bankman-Fried appeared to confirm reports that funds had been moved between FTX and Alameda, adding that he thought Alameda had enough collateral to cover the moves. Soon after that, blockchain analysts tracked the flow of $400 million of assets out of FTX accounts, though it was unclear why those funds had been moved. However, Bankman-Fried denied funds having been forcibly funneled from one company to the other. He blamed the transfer on an internal mislabeling issue. FTX's current CEO, John Ray, who helped navigate Enron through its corporate bankruptcy process in the early 2000s, said it is difficult to ascertain how and why the company's fund has been handled the way they were. That's because FTX and its sister companies allegedly didn't follow standard financial reporting procedures. Normally, a business produces balance sheets several times a year that provides reliable information on the company's assets, that is what the business owns, and its liabilities, that is what it owes. But the balance sheets of Bankman-Fried's firms were never audited. According to the company's bankruptcy court filings, this means there are no reliable accounts or paper trail of what money the company had and where it went. Ray called FTX's poor management and financial opacity unprecedented. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. Ray wrote that the company has thus far secured $740 million of cryptocurrency held by the various companies that made up FTX. What did Sam do? Before the full extent of the crisis became public, in desperation to keep his company afloat, Bankman-Fried grasped for a lifeline as signs of a broader crypto crash loomed. Zhao, the CEO of Binance and one of FTX's first investors, stepped into to make a play for his former rival. On November 8th, he announced that Binance would purchase FTX for an undisclosed amount, in what essentially constituted a bailout for the beleaguered firm. But Binance quickly backed out, with Zhao citing reports that FTX had mismanaged users' funds and information gleaned during the standard due diligence process that accompanies such deals. Bankman-Fried had acknowledged the company's problem on Twitter, where he remained active. Last week, he posted a lengthy thread that started, "I am sorry, that's the biggest thing." On Friday, November 11, Bankman-Fried stepped down as CEO of FTX, and the companies he oversaw filed for Chapter 4 bankruptcy. The Wall Street Journal and Associated Press, citing anonymous sources, have been reported that FTX now faces investigation by the Securities and Exchange Commission and the Department of Justice. To all crypto lovers, kindly subscribe to our channel and click the bell icon to get our latest videos. Thanks for joining.